Hey everyone, welcome back to the channel. Now we all know that real estate investing is a powerful wealth-building tool, but when it comes to paying off your rental property mortgage, it's a topic that's a bit controversial. Some people say it's the best thing you can do for financial freedom, while others argue you should just keep using other people's money, aka your tenant's rent. So what's the deal? Is paying off your rental mortgage a genius move or a waste of time and money? Well, today we're diving into that exact question, and spoiler alert, I think you might be surprised by the answer. Make sure you stick around to the end because I'll be doing some serious math. Don't worry, I'll keep it fun, and we'll see if paying off that mortgage really pays off in the long run. Before we jump into the details, hit that like button, subscribe, and share this video with anyone who's wondering whether or not to pay off their rental property mortgage. You know, your real estate buddy or that cousin who swears by keeping debt forever. So let's start with the basics. When you buy a rental property, you've got two options. You can either take the debt route, which means getting a mortgage and using someone else's money to help you buy the property, or you can pay it off in full and own the property outright. Simple, right? Well, it's not as simple as easy choice or no-brainer. Some real estate investors are all about that debt-free life, while others love the idea of leveraging their money to scale faster and grow their portfolio. But here's the kicker. Why is paying off the mortgage on a rental property considered an underrated strategy? You'd think it's a no-brainer to get rid of that debt ASAP, right? The thing is, when you dig into the numbers, things start to get a little more interesting. Let's start with the pros of paying off your rental mortgage. First, you can say goodbye to that monthly mortgage payment. When your rental property is paid off, you get to keep the entire rent check, which means higher cash flow. That means you're no longer writing a check to the bank every month and more money goes into your pocket. Sounds great, right? Well, the benefits don't stop there. Let's talk about the peace of mind that comes with owning a property outright. No more worrying about interest rates, mortgage payments, or the potential for a lender to call in the loan, although that's rare. Plus, you have more financial flexibility. If your tenant moves out, you don't have to stress about covering the mortgage while you look for a new one. And who doesn't love the idea of being debt-free? It's like the ultimate financial flex. You're walking around saying, "Yep, I own this place. It's all mine." You're basically living the dream. Now let's flip the coin. While paying off your mortgage sounds like a great idea, there are some downsides to consider. The biggest one, you're tying up a lot of capital. Money that could be used elsewhere to grow your portfolio or make other investments. See, in real estate, leverage is your best friend. By borrowing money to buy properties, you're able to purchase more properties and spread your risk. If you put all your cash into paying off one property, you're locking up that money, and it's not working for you in other ways. Think of it like this. Imagine you put $100,000 into paying off a rental mortgage, but instead you could use that same $100,000 as a down payment on 4 more properties. That's 4 more opportunities to earn rental income, build equity, and eventually sell for a profit. Okay, this is where the magic happens, the math. Now don't panic, I'm not going to throw a bunch of crazy formulas at you, just some simple stuff to see if paying off your mortgage early actually makes sense in terms of ROI, return on investment. Let's say you've got a rental property that you owe $200,000 on, and you're making an annual profit of about $12,000 from that property. Now if you're looking at paying off the mortgage early, you've got to ask yourself, what could that $200,000 do elsewhere? Could it earn a higher return than the interest you're paying on your mortgage? Now let's say you're paying 4% on your mortgage. Over the course of a year, you're paying around $8,000 in interest. So if you paid off that mortgage early, you'd stop paying that interest, right? But hold on, what if you could make 8% on your money by investing elsewhere? Well, that's a double whammy. You're saving on interest and earning a return on your investment. See, this is where the math gets fun. The question is, could that $200,000 earn you more money than the interest on the mortgage? Spoiler alert, usually yes it can, especially if you're leveraging your money and investing in more properties or high-return investments. So, now you might be thinking, okay, keeping the mortgage might actually make more sense than paying it off early. But before you run off and start thinking about all the shiny new investments you could make, let's not forget that having zero debt on a rental property has its own set of benefits. It's really a personal decision. If you're someone who values peace of mind, enjoys the security of knowing that your property is fully paid off, and you're not too focused on maximizing returns, then paying off your mortgage early might be the right play. Just remember, you don't want to end up being that person who's totally debt-free, but also totally broke because they put all their cash into paying off one property. Be strategic. All right, here's the bottom line. Paying off your rental mortgage early can be an excellent strategy if your goal is to reduce risk, maximize cash flow, and achieve that debt-free lifestyle. But if your main goal is to grow your portfolio and increase wealth, leveraging debt and investing elsewhere might be the smarter play. At the end of the day, it's all about your personal financial goals and risk tolerance. There's no one-size-fits-all answer. The key is to crunch the numbers, figure out what works for your strategy, and make sure your investment decisions align with your long-term goals. So, whether you're the type of investor who's all about keeping the debt or the one who loves the idea of being mortgage-free, there's no wrong answer. Just make sure you're considering the math and your personal goals. And hey, if you like this video and you think your friends or family would benefit from hearing about the pros and cons of paying off rental property mortgages, share this video with them. Also, don't forget to like, subscribe, and hit that bell icon so you don't miss any more real estate tips and financial insights. Thanks for watching, and I'll see you in the next one.